In a world where prices keep rising and money quietly loses value, most people are working harder than ever, yet somehow staying in the same place. They trade time for money, spend what they earn, and hope it will eventually be enough. But there is another way, a system that has built wealth for centuries, a system based on ownership, patience, and growth. It's called investing. Investing is often misunderstood. Some people think it's gambling. Others believe it's only for the wealthy, or that it's too complicated to even begin. In reality, investing is much simpler than most people imagine. Investing is the act of putting your money into an asset with the expectation that it will grow over time. You give up money today so it can multiply tomorrow. Unlike spending, where money disappears, investing is about ownership. When you invest, you are not just buying something temporarily. You are owning a piece of value. And ownership matters. Saving and investing are not the same thing. Saving means storing money. Investing means growing money. If you keep $1,000 in cash for 10 years, you will still have $1,000. But because of inflation, that money will buy less than it did before. If your money does not grow, it slowly loses power. Investing is one way to protect yourself from that silent loss. There are many things you can invest in: stocks, bonds, real estate, businesses, index funds, commodities, or even your own education and skills. All of these are assets, and an asset is something that has the potential to generate income or increase in value over time. Every investment involves risk. In general, higher potential returns come with higher risk, while lower risk usually means slower growth. There is no guaranteed profit. There are only informed decisions. When you invest in a company's stock, you are buying a small part of that company. If the company grows and becomes more valuable, your share may increase in value. If it earns profits, it may distribute dividends. And if it performs poorly, your investment can decrease. This is not magic. It is participation in economic growth. One of the most important concepts in investing is compound growth. Compound growth means earning returns on your previous returns. If you invest $1,000 and earn 10% per year, your gains begin to generate their own gains. Over time, this effect becomes powerful. Small amounts of money, when invested consistently and given enough time, can grow into something significant. Investing is not about getting rich overnight. It is not about chasing trends or copying influences without understanding risk. It is a long-term process that requires patience, discipline, and emotional control. This is the foundation: ownership, growth, time, risk. In the next lesson, we will explore how investments actually generate returns and how you can begin building your own strategy.